Okay, hello everybody. My name's Nico. Welcome to the Trading Setup channel. To this week's live stream, we're going to be talking a bit about one of my favorite techniques of trading, and that's divergence. I absolutely love it. I've been using it for many years now because it always works. And when I say it always works, I do not mean that you will be winning every single trade you take off divergence, but it's something that you will be able to continuously use from today. So once you understand it, once you actually a few people struggle a bit to understand it at some in the beginning, but once you get the hang of it, you can use it for the rest of your trading career. It will always work. It's just like I said, there is no strategy that's going to give you 100% win rate. It doesn't exist. So if you are chasing that stall, give it up and look at some different strategies. Anyway, so please feel free to ask any questions while we're doing this. This is a great opportunity to ask questions and get them answered immediately. We are real time. I do have an eye on the chat as well. But yeah, without any further ado, let's dive into divergence. Okay, so we're on our platform here. First thing that we're going to do today is we're just going to have a look at what divergence is. Now, before we kick off, there is 4 different kinds of divergence. The first is firstly, you get your 2 normal divergences, which are also reversal signals. So that's you're going to get that at the end of a trend usually. And then we have hidden divergence, which is a continuation signal. So that's going to take place in the middle of a trend, or somewhere between, it's just after a trend has started and you can clearly identify that a trend has begun. That's where you're going to start picking up hidden divergence. This is the one that most people struggle with as well, but I promise you, once it clicks and you understand it, it's an invaluable trading tool. So let's have a look at the 4 different kinds of divergences. Like I said, you get the 2 normal and the 2 hidden. Normal bullish, normal bearish, hidden bullish, hidden bearish. So we're going to have a look at that. And like I said, at any time, if you guys have any questions, if there's something that I'm not explaining properly, please feel free to ask. I will be able to answer basically immediately. Okay, so for divergence, the first thing that we're going to need is an oscillator. An oscillator is an indicator that moves between 2 set points or that moves around a 0 point. Now, oscillators that moves between set points, a great example will be the stochastic or the RSI. Both of these move between a value of 0 and 100. They cannot move out above that. Something that moves around a 0 line would be an example. The CCI would be an example of that. And I think we're going to use those 3 as well while we're at it. We're going to use those and see what divergence looks like. And then we'll, as we go along, we'll also see if we can pick up some trades. Let's start with the stochastic oscillator. I'm going to take one at a time. The concept is the same for all of the indicators. Whatever you want to use to find divergence, you can use the MACD, you can use the Williams percentage R, you can use anything that oscillates between values or around a 0 point. The MACD revolves around a 0 point as well. You've got the 0 line and then above and below. So any indicator that behaves like that, you can use as a divergence indicator. Okay, so we're looking at the stochastic. We've got the stochastic here on our chart, so we can see that the stochastic is flowing. That's normal movement. It's flowing. We've got our highs. It's making lows and peaks and lows, peaks and lows, or peaks and troughs, I should really say. So this is what the stochastic oscillator looks like. If you've ever opened a chart, you've probably had a look at the stochastic oscillator. Nothing new there. Divergence comes in where we look at price and at the oscillator movement, and we what's the word? We compare the 2 movements. We're going to go back to basics quick. If you remember, I've said in quite a few previous videos The basic definition of a bullish trend is price making higher highs and higher lows. And the basic definition of a bearish trend is price making lower lows and lower highs. The same goes for the oscillators. Your oscillator will make highs and lows along with price movement. And this is normal. If we look, this asset is extremely volatile. Let's just see if I can find something that's a little bit, there we go. Okay, so this is a little bit more smooth. If we look at the price movement here, we can see prices going up, and that's where the stochastic went into oversold. We had this pullback here, stochastic did a pullback, went back up, went back up. So price movement is correlating with the stochastic movement. We can see that every time price makes a high, the oscillator makes a high, and every time price makes a low, oscillator makes a low, carry on, carry on. So as a rule, most of the time the oscillator will move along with price. It will behave in the same way, but we do get areas where it doesn't, and that is the divergence areas. Okay, so if we have a look, for example, at this, what happened here, we can see that we very clearly, there we go, let's just make this a little bit thicker. Okay, we can see that here price had a drop, price did a pullback, oscillator did a pullback, price pushed back up, oscillator pushed back up, but it made another pullback almost immediately. And this area now, price made a higher high, higher low, because this low here is higher than this low here, so it's a higher low. But we can see that my oscillator pulled back quite a bit further than it did with the previous pullback. Okay, so now we have, I don't think I can actually draw on the indicators. Let me just have a quick look. Yeah, okay, so I cannot draw on the indicators, unfortunately. So we have my oscillator making a lower low while price is making a higher low. And this is hidden bullish divergence. So this is what hidden bullish divergence looks like. Price is making the oscillator is making a lower low, and this would have been a buy signal for me. Now, if I'm trading divergence, if I'm trading on 1 minute, I will usually take around a 5-minute trade. I would definitely not recommend you take a single candle, because divergence kind of needs time to play out most of the time. So usually it will need a couple of candles to play out. So if you're trading 5 minutes, you might want to do a 15 or half an hour, 30-minute expiry. I actually often use divergence also on 10-second charts, where I do a 1-minute expiry, then that's 6 candles. And a 5-minute expiry on a 1-minute chart is 5 candles. So I give it a few candles to play out. We're going to look at that. We're going to look at different time frames. The nice thing that I actually forgot to mention about divergence is it works on any time frame. You can use this on 10-second charts, you can use this on daily charts. So depending how you're trading, you can use it on any time frame. You will find divergence on all time frames. So yes, okay, so this would have been a buy signal. So maybe I should draw it like this. Let's just learn this. Okay, so when price is making higher lows and my oscillator makes lower lows, that is what hidden divergence looks like. If you compare this, the movement of this low to this low here, and that low to that low there, this is what hidden bullish divergence looks like. Okay, so that's one form of divergence. The hidden divergences, remember, we are looking, when price is moving upwards, we look at lows, because if a low is broken, that could signal a reversal. And when price is moving downwards, if price is in a downwards trend, we look at the highs, because if a high is broken, we could be seeing the start of a reversal. It doesn't mean we will, but it could be a reversal signal. So for hidden divergence, when we're moving upwards, we're always going to look at the lows. Okay, so at the bottom of the chart. And then in a bearish trend, we will always look at the highs. let's see if we can find an example of what hidden divergence would look like in a bearish trend. So first we're going to just have a look quick and see if we can find an area where price is dropping. Here we go. So this is an example of bearish divergence. Let's draw this in quick. I can see that when price pushed back to this area here, this low, even if I draw this on the wicks, we can clearly see that this low did not reach as high as this low was. But if I, sorry, this high didn't reach as high as this one. So price made a lower high. We're moving downwards, so we're looking at the tops, right? So price made a lower high here, and price made a, the stochastic made a higher high than the previous one day. This again would have been a sell signal. This is hidden bullish, hidden bearish divergence, which is a continuation. Remember, the hidden divergences is continuation divergence. So this signals to me that price can continue its way down. We are likely to continue down. So this would have been an area where I would have taken a sell trade. How do I time it? Usually, either on the crossover, if I get the crossover on the stochastic, or as soon as the stochastic leaves the overbought or oversold area. In this case, the overbought. It would have been on this candle here. So if you took a 5-minute sell on that candle there, you would have had a good time. Okay, so that's hidden divergence. Let's have a look if we can find a good bullish divergence, a normal bullish divergence, and hidden normal bullish and bearish divergence examples. For those, we're going to look at the tops. Okay, so we are moving upwards. Price is moving upwards here, and here we can see this is very sloppy though. I don't really want to use that example. It's a valid example, but I just want to see if I can find an actual nice example. Okay, here we go. Right, so we are in a downwards move here. From started there, we did see some pullbacks and whatnot. But if we look at these two lows here, price was moving downwards, making lower lows and lower highs. But if we look at the last two lows that we made, if we look at that low there, then that low there. Okay, because we did get a pullback here. If we look at what the stochastic did, the lows were, this low was higher. This is signaling me that we could be seeing a reversal coming up shortly. So this is normal bullish divergence. Like I said in the beginning, bullish normal divergence you will usually get at the end of a trend, because when you get normal divergence, and if the normal divergence plays out, you usually see a change in the direction that we're currently moving. In this case, we were moving downwards, and we can see that we had a change and we started going upwards. So this is what normal bullish divergence will look like. Normal bearish divergence is what we'll look for on the top of the charts then. Because if we are in a bullish movement, in a bullish run, normal divergence will give us, will tell us that we could be seeing a reversal in the trend and we could be dropping. We're going to look for some entries just now as well. I'll show you guys how we do this in practice, how to time it. Hopefully we'll get some nice divergence examples. Let me just see if I can get a quick example. Here is normal bearish divergence. Okay, so we were in an upwards run. Again, price was making higher highs. And if we look at that high versus that high there, even if we put it on the wicks, there's no doubt that this second high that formed here was higher than the previous one. But if I look at my stochastic oscillator, it made a lower high. So this again signaled to me that we could be seeing, we could be on the beginning of a drop, of a reversal, because we are in a strong upwards move. And that's indeed exactly what happened. Okay, so again, if you got in somewhere around here, this area here, 5-minute sell, let's see, yeah, maybe on that red candle or the green one, 5-minute sell here, because we're on a 1-minute chart, would have been a good trade. Okay, so you're not going to get divergence entries every 2 minutes, be prepared for that. This is not something you're going to be trading left and right, but it is a very, very solid way of trading. Let's get rid of that. Okay, so we use the stochastic as an example now. Like I mentioned earlier, you can use basically anything. Let me just change. I'm just going to change the style. I'm not going to change the actual values. I just want to make this a little bit easier to see. Okay, so you can use the RSI as well. This example we had here earlier, where we had the higher low and the stochastic was making a lower low, we can see that the RSI did in fact do the same. The thing with the RSI is that it can be moody. It tends to be more erratic than the stochastic, for example, or the CCI. And if we look at the movement, it's very erratic. The RSI movement isn't that smooth. Okay, but you can definitely use the RSI to find divergence as well. We can have a look at the CCI, for example. If we look at the CCI, where was that example we had here? That was the first one. We can see that the CCI as well made a lower low on this area, on this low here, where we said we had a more hidden bullish divergence, and we can see it on the CCI as well. Okay, so again, CCI might not always be, but this is set to 20. Let's put this on 40 and see if this smooths it out a little bit. Let's smooth it out just a tad. So your CCI as well can be used for divergence. It can be a bit choppy at times depending on what the market's like. So you'll need to keep that in mind when you're watching. Just keep in mind what the market is like, but CCI can be used. We can use the MACD, for example. The MACD is going to give you bigger moves though. I wouldn't try using the MACD for Forex. Oh, sorry, for options. I would, if you want to use divergence and you want to use the MACD, it should work better in Forex because it's going to give you, because of the way the MACD moves, it's going to give you the larger divergences. Let's just see if we can find an example, which is actually making my point here. I'm struggling to find a good example on this chart where I can find good examples on the RSI and the stochastic. I'm struggling to find nice clear examples on the MACD, but you can use it. I have in the past. There's an example of bearish, normal bearish divergence. This high was higher than this one, but we can see how the MACD is moving. So you could have, on that crossover there, you could have taken like a 5-minute trade maybe. But like I said, the MACD is great if you're looking at the longer term charts to catch the bigger moves. So that would be on a 1 hour or 4 hour chart. But you can use the MACD. And you can play around with the settings. Remember, all the settings of these indicators can be changed. We don't need to use the default settings. You can change them depending on your time frame. As a rule of thumb, if I go to higher time frames, I tend to use change my indicator settings to a little bit higher values. If I'm going to lower time frames like 10 seconds, I tend to bring them down a little bit just to make them a little bit faster. But you can use it on any time frame. We've been on a 1 minute chart now for the whole time, but just to as a quick example, we can find examples of divergence. Let's see if we can find a decent one. You can find examples of divergence on any time frame. Obviously, the higher your time frame, there was some nice bullish divergence here. Normal bullish. So price made a new lower low here. Stochastic turned up higher, as did the CCI. The CCI low was also higher than the previous low. So that was a good example of normal bullish divergence where you could have taken a buy here. In this case, though, you would have taken a buy for 5 or 6 hours. So great for Forex on the 1 hour chart and such, but not so good for options. If you know, 1 hour and 4 hour charts, not that good for options. But you can do that. I think the longest expiry time we have is 4 hours. So I wouldn't use divergence on a 4 hour chart, but you can definitely use a 1 hour chart or a 30-minute chart. You can use this on any time frame, and that's the reason I love this so much. It works on any time frame. It's universal. It doesn't differ. Stays the same. Doesn't matter what asset you're on. You can use this on currencies, cryptos, oils, sorry, not oils, commodities, indices. You can use this on anything. Divergence always works. Again, you will not win every single trade you take, but divergence, I've been using this for years. It always works. Okay, so you guys have any questions maybe? Feel free, please don't be shy. Let's see if we can pick up some trades. I'm going to be on a 10-second chart. I'm going to go through all the assets, and I'm just going to see if I can pick up. Since I'm on a 10-second chart, I'm going to do a 1-minute expiry. I'm just going to go through all the assets. This will work on real market, OTC, doesn't matter. You will find divergence everywhere. So yeah, hopefully we'll find a setup. Would be nice. So one of the things that's nice about divergence as well, and I forgot to mention this, is that you can spot divergence. You can see divergence forming before it actually forms. I'm going to see if I can quickly find an example of that. What I mean with this is, if price, suppose we're looking at the stochastic. If I can see clearly that price is making a higher low, but my stochastic has not yet crossed over and it's already level, or it's moving downwards at a rate that looks like it might surpass the previous low, or not, depending on which divergence we're looking for, you have more than enough time then to prepare for in case it does happen. Don't get me wrong, you should not try to predict where divergence will take place or if divergence will take place. You're going to be wrong more than you're going to be right, I can promise you that. But it does have, once you can spot it quite easily, it does have like an early warning system where you can see it form before it actually forms. And it doesn't need to be close to forming. There are situations where you can clearly see that you will be getting divergence in the near future. You just need to wait it out, wait for it to finish forming, and once it forms, then you can actually enter your trade. I would really love it if we can get a nice divergence example before the stream. It would be so nice. Did I miss this? So RSI looks like it made a higher low. The stochastic definitely did, but our entry should have been here. The entry should have been much lower if we wanted to take this. We might get, this is what I was meaning, this is what I meant earlier though with the early warning system. We might get a hidden bearish divergence now as well, because this was the high. Price is clearly making a lower high at the moment. This could still change, but at the moment, as it stands right now, price is making a lower high. And my stochastic has already made a higher high. My CCI has already made a higher high. RSI already made a higher high. Now I just need to wait to see if price forms a high. That means I'm going to have to wait to see if price turns down from here. This is one of the reasons I like the stochastic so much for divergence. Okay, so price pushed past. Unfortunately, this did not form. Like I said, you're going to get times where it ends up not forming. It happens, but this would have been a great hidden divergence sell if price turned back down around this area here and did not break this level here. Now that it's broken, it's no longer divergence, because now my oscillator made a higher high, but my price did as well. So there's no divergence there. So there's nothing to trade. But you can start spotting it. I could spot it when price was still here. I could see that my oscillator is starting to make higher highs. I need to be on the watch out or on the lookout. If price does turn down, I'm going to have a trade on my hands and I'm going to have a trade opportunity. Unfortunately, price just kept pushing on this example, so no trade there. But it's a great way to get to spot rates early. Again, example here. Might have had, if price turned somewhere above this level here, we would have had beautiful hidden divergence, hidden bullish divergence. It did not though. So also another thing I should mention, actually, I've seen people measure divergence on different lows and different highs. So someone would have gone and say, okay, this low here was the low of this low. This low was higher than this low, and the stochastic wasn't, so this is a buy. This might not be the best example because price is going up, but divergence is measured peak to peak, not peak to 3 peaks back or peak to 5 peaks back. Peak to peak. What does that mean? So from there to there, not from there to there, or not from there, that high to that high. Only the two most recent highs, only the two most recent lows. The previous lows and stuff or highs does not matter. It's irrelevant, doesn't matter. Don't measure your divergence on different peaks, on historical peaks. The last two highs, the last two lows. That's where your divergence takes place, always. Okay, keep that in mind as well. Let's see if we can find another one. I would really love to find a decent entry. Just one divergence example. Because one of the questions I get asked, I would say 9 out of 10 times when I'm explaining divergence to people, by far the question I get most is, how do you know when to enter? That's the thing that most people want to know. And the answer to that would be, as soon as the divergence forms. As soon as you can confirm the divergence, that's when you enter. Not quite. Okay, we had some bullish divergence form here. It's very tight, but it's there. If we look at this drop here, we had the pullback and then the drop here, and we can see that the stochastic made a higher low. RSI made a higher low. CCI made a higher low. Unfortunately, we missed the entry on this as well, which is very unfortunate. Is what it is. Now, best chance to get divergence for the video, so for the stream, so that we can actually see an example, would be on the 10-second chart. I think I'm going to go through a few of them regardless of the payouts. Just see if we can maybe find at least one example where we can actually take a trade. Okay. It seems we're not going to get a decent example of an entry, which is unfortunate, but We cannot trade what the market doesn't give. Instead, I want to show you guys something else. This might be a bit more valuable in any case. If you go to an asset and you look at the higher time frames, let's say we look at the 1 hour. This I'm just going to look for an asset that's trending nicely. Okay, because I want an asset that's running in a channel. Just see what this looks like on 30 minutes. No, we're not 1 hour. This is something else that I've been using for a long time, and a lot of people don't realize this. Let me just find an asset quick that's okay. This might actually work. As soon as you can spot price going into a channel, like this is a channel, price has started going into a channel. What you're going to find quite often, and this is very useful for forex trading, if you're looking at higher time frames, like for example the daily chart or the 4-hour chart or the 1 hour chart, if you're looking at those time frames and you find decent proper channels, like this is the start of a what seems to be might be a good channel. What I'm going to do quick is I'm just going to drop a vertical line. We're going to make it nice and thick. We're going to change the color because I want to mark something quick. I want to mark this area here. Okay, now I'm going to go down to a 5-minute chart. If I look, way past. If I look at this area here, where the top side of the channel was, where price was testing the channel, you're going to be very surprised how often you're going to find normal divergences on the upper and lower sides of the channel. On all assets, on commodities, currencies, doesn't matter. You will be very surprised that once you find an established channel, you're going to get divergence. There was divergence there. We could have taken a sell trade there, because we've got the divergence on the stochastic there. We've got divergence on the CCI, sorry. Price was making higher lows. Both my stochastic and my CCI was making lower highs. Higher highs, lower highs. You will be very surprised how often you will see divergence forming right on the channel lines. This is very, very useful for forex trading. Not so much for options, but you can still, if you want to look at a 5-minute chart, for example, or a 1-hour chart, and you draw in some trend lines, you will find on 5-minute and 1-minute charts, but that's a bit of a gap between a 1-hour chart and a 1-minute chart. But you will be very surprised at how often you will find divergence. If you draw a channel on a 4-hour or a 1-hour chart, how often you will find divergences right on the channel lines, on the 5 and 15-minute charts. It's absolutely amazing, and it's something that a lot of people don't realize. We had bullish divergence here as well. So price is heading towards the lower side of the channel, and we start getting bullish divergence. If we look at these movements here, we had bullish divergence on the CCI and on the stochastic. And what happened? We had price push upwards. If you took a forex trade here, for example, this would have been a very nice move to get into. So yeah, there's places where you can find divergences. Same goes as well, by the way. The exact same thing works with support and resistance areas. If you look at just your most recent support and resistance area, let me draw that in quick. So this will be on the 1-hour chart, the current resistance area for this asset. Okay, so that's on the 1-hour chart. If you're still struggling with support and resistance, how to spot them, where to draw properly, how to draw them properly, and where they should go, I did do a stream 2 weeks ago. Go have a look at it. We covered support and resistance and channels and such. Okay, but so there is a very good chance. There's a decent chance. It doesn't, again, I'm not saying it will. You should never try to predict what will happen. But there is a very good chance that we're going to see bearish divergence form just below this somewhere. So price might assault this line again, might test it, and then fail. Maybe it will push up higher, and we might see divergence on one of our oscillators or on all of them. And then we see price push back. Once it happens, it's a sell for sure. That's where I start taking sell trades, but it still needs to happen first. It hasn't happened yet, but it will quite often. You will see if you have a decent support or resistance area, you will find that price makes divergence just above support or just below resistance. And then you know how to take your trades. So that's another way of timing your divergence trades. Okay, so we don't have a lot of people watching, but if you guys have any questions on this, unfortunately, we didn't get any examples of good entries as we were going along. It's a pity, but this is divergence, and it's going to take you, might take you a while to get the hang of it. There's also a ton of websites that if you just Google divergence forex trading or divergence options trading, you're going to get a ton of examples, you know, of what it should be like. Have a look. It's worth putting the time and effort into to master this. This is definitely one of those things that I do not think anybody should be trading if they don't understand this, because it's invaluable. It's one of those things that's really, really invaluable. It's just as important as knowing what support and resistance lines are, I think. But yeah, that's divergence. The 4 types, we covered them all quickly. And yeah, I think that's it for today's video. If there's no questions, this is where we'll end. Let me just see. Okay, so no questions in that case, guys. Thank you so much for watching. And if you're watching this in the future, we stream on Wednesdays. So if you're watching this and it's not live, feel free to tune in on any Wednesday and join the live. It's a great time to ask questions and get answers in real time. So yeah, guys, thank you again for watching. Remember, if you haven't yet, subscribe to the channel, and I'll see you guys next week Wednesday for another stream. Until then, cheers.